Hello everyone, my name is Matthew Fraley with BreakpointTrades.com. As the name says here, we are masters at technical analysis. We analyze the markets, give trade ideas, and we've been in business since 2003. Anyway, today's video, gonna just take a look at a big picture idea with the markets. So I'm just gonna pull this up. And again, this is kind of academic, but it's kind of a fun chart to look at, so let's just take a look at it. So first off, this is a quarterly chart of the S&P 500, goes back to the 1920s, as you can see, up to the current time frame where we are now. And you all may have heard about how the market moves in these secular cycles, secular bull markets, secular bear markets. And there's also another name for this where the market moves in these, say, 30-year cycles where folks have done work on it going back, 1,000 or 2,000 years. Starts with the name a Russian guy. I can't think of the name of it right now. It starts with a K, but you may have heard about that before. But anyway, so let's just take a look at this chart. So first off, each candlestick here is a quarter, 1 quarter. And a couple things here. So again, as you know, market was in a sort of a secular bull market in the teens and 1920s. Then we had that peak in 1929. Then, of course, the famous stock market crashed where it lost around 90% of its value. After that crash, which lasted about 2.5 years, market then went in this huge up and down sideways range. We call that a secular bear market, where it's just trading in this big range. And the secular bear markets I have highlighted in this sort of goldish orange or peach type color. So this area here where price didn't break out to a new high was about 16 years. You could see in the 1960s, we also had about a 16-year up and down sideways movement. During that time, you have very strong, what you call cyclical bull markets that are just 2 or 3 years long, and then cyclical bear markets inside the overall sideways secular bear trend. You break out of that and you go in a new secular bull market. And then we were in a secular bear market from 2000 to about 2012. And obviously and what I mean by bear market is obviously the market bottomed in March 2009, but I'm just talking about where it breaks out of that range. It didn't take out this sideways range until right around 2013. Anyway, let's look at some commonalities here and see if we can do some projection for the future. And realize this is completely academic, right? We're going to take a broad assumption that things are going to follow in a similar fashion. But as you know, markets can do whatever they can do. And, who knows if the Federal Reserve or whatever, they blow up the money supply, monetary system crashes, that this all doesn't come crumbling down. But let's assume that doesn't happen. Let's see if we could see some commonalities here. So here's your secular bear market range in the 30s into the late 40s. And we broke out of that, entered this secular bull market here. Now, this says 24 years long. I'm counting this from the low here, which was about the middle of the secular bear, to the height here in 1966. So right around 24 years. Okay. During that time, if you could see here, the S&P had around a 21 to 22 fold increase from this low to this high. Okay. So 22 fold increase. And again, it lasts about 28 years or 24 years from this low to this high. Then you had your secular bear market, 16 years sideways up and down. And then we broke out of this range in the early 1980s, which lasted until March 2000. Okay. Now, if we take the low here, which is sort of the middle of this secular bear where the absolute bottom was, just like we did here, from this low to this high was about 26 years. So pretty similar, 26 years, 24 years. All right. So under that assumption, we're going to assume that a secular bear or bull market on average from the very bottom to the very top lasts around 25 years. Okay. Now, what percentage did this increase? So from this very low, right around 61, to the high here, 1553, we saw about a 25-fold increase. So pretty similar to this. This was a 21 to 22-fold increase. Obviously, this was a little more, but again, basically in the ballpark. And obviously, in the ballpark of the time range, 24, 26 years. Okay. Then we entered this secular bear range, and this was a little bit less than these. It was 13 years from 2000 to 2013 versus the 16 years on average these two were. So if we take from this bottom, the March 2009 bottom to now, so we're right around 12 years. So we've been in this, we've been in this uptrend from here to here about 12 years. Well, if you look here, the average of these secular bull market runs from the very bottom to the top, let's say, is around 24 to 26 years. So assuming things follow the history, we're about halfway into this cycle, right? So we have about another, say, 12 years to go, okay? Somewhere out into here. And so what percentage price movement have we had? So from the 667 low to the current highs right around, 4,200, we've had around a 6.5-fold increase. Okay. Remember, if you look at the average increase from these bottoms to the tops, anywhere from 22 to 25-fold increase. So we still have quite a bit to go. We're only about 6.5-fold through here. And we're about halfway year-wise. We're 12 years versus, the average is 24, 25 years. Okay? That would, assuming by the time this secular bull ends, let's project out 2009 plus 25 years, would give us a target range to the end of the secular bull market anywhere from, say, 2033 to 2035, okay, where we would finally top out and then enter some sort of secular bear phase, okay? Where would price project? Well, assuming we have the typical 25 to 22-fold increase, you're looking at the S&P projecting anywhere to 13,000 to 16,000 over the next, 10, 12 years. So what's interesting here is that even though we're only about 6.5-fold increase from the very bottom here, the easy gains have been made. So if someone was to go long brand new right here, then the S&P may only, if it achieves these target areas, 13,000 to 16,000 by by 2033, 2034, we're only looking at about a 250, 300, and 350% move over the next 12 to 14 years. Again, that's still pretty decent, but nothing like if you went long back here in 2009. So those are some interesting things, guys. We'll see if this ends up playing out. Again, this is purely academic. You don't find out if you're right for many years, but it is interesting. Some other interesting things in this chart: the quarterly, the 5 RSI length, I think is pretty interesting. Notice how every time in the secular bear markets it's gotten oversold. Those were actually areas where you could have taken a long. Notice it got oversold 3 times during this secular bear market, got oversold twice in the 1970s, this bottom, and twice during this secular bear market, once, in the 2002 bottom and once in the 2009 bottom. Both good buy opportunities. And you could see during the secular bull markets, it never gets oversold. Sometimes, it'll go below 50% during the what you call the cyclical bear markets. Those are the small bear markets within the overall uptrend. it'll dip below 50%, but those end up being buying opportunities. You could see here in the March 2000 when we had that, March 2020 when we, with the COVID, and we had that big 35% correction, you could see it dip a little below 50%, which ended up being a buying opportunity. You had a little dip here, 2018, and you had one in 2015. So the next time we'll see the 5 RSI oversold, assuming this chart plays out like the past history, we probably won't see this till 2035, 2036. Who knows? It's going to be a long time. But we're going to have some cyclical bear markets along the way, and we'll see these pull back eventually. By the way, I made this chart, I think, back in 2017. So I'm just doing an update on it. At the time, I had a focus on the ADX, which isn't behaving exactly like it did back here where you had the ADX expansion. But you can see right now the ADX broke out of this little resistance, pulled back, and it's right at the support here. So it's going to be interesting to see if this can launch forward. Interestingly, the PPO indicator here, which is basically the same as the MACD, but it's used more on these larger time frames when you have bigger moves. Interesting that it just crossed pretty recently. Doesn't look like that's done yet or ready to roll over. But I do think we're eventually going to have some sort of pullback correction. We'll see when that occurs. But for now, we're just in this uptrend. Really, that's all I wanted to cover in this. Just more of an academic, interesting discussion. And that'll do it. All right, guys. See you in the next video. Take care.